And we're live. Phil Tarrant, Tom Panos. Phil Tarrant out of Sydney, New South Wales, Australia. Tom Panos, Auckland Airport. Travel extraordinaire. Tom, how you going?
I'm good, Phil. I'm good. So to all our viewers and listeners, I'm letting you know there could be a little bit of background noise. Having said that, I think these AirPods do a really good job at just carrying your voice. But Phil, the reason I'm doing it here is that, as I said to you before, if you go into the lounge, you can upset people. They go in there for privacy. So I often find just finding a quiet spot at the airport is the best place to do it. And I'm at Auckland Airport. I've come here for a conference late last night. I flew in, and it was for the Sotheby's group here in New Zealand. They had their mid-year conference, and there was about 170 people there. And it's now lunchtime here. So, sorry, it's 2:30 here. It's 12:30 in Sydney, and I'm heading back. And I know that I'm very mindful today, Phil, because you've got a lunch meeting that you've got to attend to. But I'm really pumped and excited today, Phil, because I can tell you for the first time since April, I had my highest clearance rate last week, 8 out of 9. I'm prepared to actually put my neck on the line, Phil, and say I believe that we are very close to the bottom. It's being reflected by the multiple amount of bidders I'm seeing back at auctions. 8 out of 9 is a pretty good result in this market. Marcus Chiminello, who's one of the big award winners for REB, has sold an $80 million house in the last week, sold a $70 million house in the last week. There's a mood of anticipation that the worst is gone by, and I know that John McGrath, and it might have been you guys carrying that piece, John McGrath believes the worst is over. I still believe, Phil, that we're going to get a 5 or 7% drop in Sydney and Melbourne because of the excess stock that we're going to hit over the next few months. But I can tell that buyers have already factored in that the Reserve Bank has actually, not the Reserve Bank, Commonwealth Bank has actually reduced its long-term fixed rates. There's a mood there that we're not going to be facing long-term high interest rates, and that this has simply been a tool that's been used by the government to actually try and get inflation under control. And I think they're moving forward in that regard, Phil. So I'm pretty excited. I'm pretty pumped, and I'm pretty certain that we're going to see a decent next few months of transactions taking place.
Well, it's good to hear, and I'd like to think you're informed on this, Tom. This is Real Estate Exposed, and sometimes our views are contrary to what other people are saying or thinking or feeling at a particular time. I think also, Tom, looking back on having recorded this with you now for a couple of years, I think our views are usually 3 to 4 months before everyone else's, and people end up subscribing into the way we see it. So in some ways, we're telegraphing the direction of these markets, and you may be the property Nostradamus, Tom. You normally get it right. I saw you on the social media the other day sort of telling everyone how good you were by calling property markets through the COVID-19 pandemic. And, you know, I was a participant in that, so I'll claim part of that accolade, Tom. But it's encouraging to hear that you feel as though, you know, we spoke about it last week. You asked me where are we on the property clock? I said nearing 6 o'clock. I think you're saying we're pretty much at 6 o'clock now. So the only way up from here is up. Now, tell me about the buying attitudes and behaviours on the weekend. Was it hard to get a opening bid out of people? What was the tempo of bidding? Was it aggressive? Was it smooth? Was it like pulling teeth? Was it like herding cats? Does it compare with other markets? Give me a sense for it, Tom.
So firstly, Phil, nothing sold spectacularly over reserve. I mean, this is not a story of, oh, wow, look at that, 400 grand over. This is simply 8 months in the making, vendors saying, well, that's the market. The market's the market. And this is basically vendors who have gone off and they've checked out where they're going to move to, and they've worked out, hey, we're probably going to buy lower than what we thought we were. So they're prepared to lower their own expectations, Phil, on their own property. So did they sell at crazy prices? No, they sold at the new adjusted market values. Were bids hard to get? No, not really, because if the property had 2 or 3 people, it was pretty much the same of whenever you're selling real estate. It wasn't that difficult. There was heated bidding in a number of the auctions. And what is the most surprising thing of all is that most vendors, they get to a figure and they just say, yeah, look, sell it. That's the market. There's a feeling with vendors, and I don't totally agree with it 100% anymore. There's a feeling with vendors, Phil, that they think that there is more to come, right? They've got this feeling there's more rates that are going up, number one. Number two, they're feeling that, hey, property prices will probably drop a little bit again. And number three, they're sort of saying, hey, I'm sick and tired of hanging around trying to run my life based on the market. I'm going to run my family based on what we want to do. We want to get moving, and people want to move, Phil, in, the later half of this year. You got to remember, the reason why spring is such a strong selling season is it's a barometer. At the end of the year, we want to be into our new home. We got to start school at the new year. People use the end of the calendar year as a bit of a line in the sand. This is where we start our new life. So, yeah. And as David, listen, I've got to tell you, Phil, as far as I'm concerned, I went and presented to a bank on Monday, right? And the bank wanted to get my views on the real estate market, which is interesting because often we get real estate agents that say, hey, we just went to a conference and we had one of the guys from the bank speak and he said this and this and that. Man, it's really, really clear. Every real estate agent out there should understand you are, in fact, the closest person to the action on what's happening in the market. Sorry, gang, the kids jumping up behind me there is kids at Auckland Airport. Phil heard me tell them before. I asked them to actually politely go and play elsewhere, but they've come back again. Here he comes again, this guy here. He just won't stop. Okay.
Mate, look, he's a real estate agent in waiting, mate. Look at that tenacity. He wants to get involved.
Yeah. Well, Phil.
So tell me this, Tom. Why are banks asking you about what's going on in the property market? All they need to do is listen to and watch Real Estate Exposed every week, and they'll know exactly the heartbeat of this.
Well, they do. They do listen to it, Phil. It's really interesting because I had people that were at there that say that this is one of the things that they tune into, because often a lot of the other content I'm giving out is more training-based content with helping real estate agents. But, in this one here, if you think about it, whether you're a broker, whether you're an investor, whether you're a buyer, whether you're a seller, whether you're a real estate agent, there's a little bit for everyone when we have these general based chats. And I think
what are the bankers saying?
Yeah.
What did you tell the bankers, and what are the bankers saying back to you?
Well, it was interesting because one of the bankers asked me a question. He said, Tom, because this was on the Monday that this took place, he said, Tom, ANZ have come out and said that there is going to be a 20% reduction in real estate. Like, what's your view? Are we going to expect to get a 20% reduction? And I said, yes, but I need you to know that 15's already happened. And that's where they turn around and say, oh, really? I said, yeah. Oh, we haven't seen that data yet. I said, well, you won't see it because it takes 3 to 6 months to see the data. So, yes, ANZ is probably right that it is 20%, but 15%'s already happened. That allows for another 5%. I reckon it might even drop more than that, maybe even 7%. But, Phil, what's the point? You got to understand, bankers, data analysts, whoever they are, they're making a calculated decision based on information they're given. Some of that information comes from Land Titles Office. Some of that information comes from CoreLogic. Some of that information actually comes from reading things like the Fin Review, listening to property blogs, watching what you do with Smart Property Investment. They collect information and they form a view. And the best views are the ones that source a broad-based, some of it will come from data, some of it will come from clearance rates, some of it will come anecdotally from conversations you're having. No one gets it. And I know this, Phil, because I often get phone calls from the 3 or 4 main real estate data analysts, and they bounce things off me. They're saying, mate, what's the mood out there, right? Like a buyer's, So we clearly know there's a thing called market sentiment, and it's very, very, very hard very, very hard to read.
So your part then in helping property professionals, bankers make a more holistic view of property markets. So what did you tell them? What's the Tom Panos forecast for the next 6 months in real estate? And I know you said, yes, 20% decrease from the peak is likely. We're probably at least 10, 15% through it. It might be another 5 to 7. What happens when we do hit the bottom? How long does it stay at that price point before prices start going up again? When are you going to start seeing the headline, the front page of Real Estate Business or the Financial Review saying prices are on the way up? Is that March next year?
January to June next year, but I don't think, Phil, when it happens, so it when prices go up after we've had a price adjustment in the market, it's not like all of a sudden you sort of start seeing prices going up really, really fast. What you just see is you come away from an auction and you say to yourself, that was a good result. And then you hear from other auctioneers, they ring you up and say, man, was it pretty good out there today? And you say, yeah. So all I'll say to you is, Phil, 35 years in this market, all I can say to you is when the market picks up, it seems to pick up sooner than what we see it. Right? You sort of, it's really, really interesting. And I think it was a CEO of Compass or one of the CEOs of the big firms in America says, listen, we sort of go into a price adjustment market and we sort of think, oh, wow, look, this has happened. And then when we come out of it, we think, oh, wow, this has happened. It happens sooner than what you think. There's a comment that's come here and I do want to touch on it because so PK Sydney Buyers Agents say, Tom, very broad statement, mate. There are so many different markets happening in Sydney at present. That is 100%. That is 100%. You got prestige market and really, really nice homes, Phil, that are beautifully renovated, go for good money because no one wants to go into building at the moment because of materials and labor costs. It says you can report only on your area and the product you're selling. Well, that's incorrect, PK, because I can tell you I get my views by talking to about 15 different auctioneers and I talk to the whole real estate industry on a constant basis. My clients, my friend, are real estate agents. Your clients are buyers. In saying a broad statement, the whole market is leveling out, the Reserve Bank waiving the blunt instrument of raising interest. P.S. I love you anyway. I love you too, brother. He is right. He is right in what he's saying. There is multiple markets. But Phil, when we're sitting here and we're reporting, we're not going to go report and talk about, hey, here's a Lakemba market, this is a dual occupancy market, right? Because there is so many micro markets. What we're talking about is a general sense, and all I can say to you is, it doesn't matter whether you're in Sydney, Melbourne, where you're in Brisbane right now, man, they're all saying it's changed. Days on market have gone up, prices have dropped. We are making a broad-based statement, but you've got to do that when you're analysing markets.
Yeah, and look, and I'm conscious of that. Nice disclaimer, by the way, Tom. This is just general in nature and don't make any investment bias based on what Phil Tarrant and Tom Panos think. You probably do pretty well, but we don't want to be responsible for anything.
Phil, you want to right now, I reckon you're a smart investor. I reckon that you've got about 6 months thereabouts to get something at good value.
Well, I completely subscribe to that point of view, and I'm chasing that myself. And a lot of my commentary to property investors is around that. You don't want to sit there going, "Oh, I wish I did." You want to be one of those people that said, "I did." And I think back in my investing career, and there's so many moments in time where I wish I did a lot more at that point in time. And I think that's the market we're in right now. So a lot of people are going to be looking in hindsight 3-4 years down the path going, I wish I was a lot more active at that point in time. I think a lot of people are starting to become quite comfortable with the idea of rising interest rates. Let's remember also only a third of Australians have mortgages. 2/3 of Australians don't have mortgages. Luke Moroney, yeah, completely agree. Keep up the good work, mate. But Tom, this is the point. If you're not active in real estate, you'll never benefit from real estate. So if you're a real estate agent providing guidance for your vendors, you need to keep that in mind. If you're selling to investors, you need to keep that in mind. If you're selling to first-home buyers or owner occupiers, you need to keep that in mind. It's a market that's fluid, it's vibrant, and it changes by the day. And for me, I get to check in once a week with what I like to think one of the leading minds in real estate. to get a sense check of it. So our commentary is generic in that we're not talking about specific markets. However, you've got your finger on the pulse, the heartbeat of Australian property, because you're on the ground. You've got boots on the ground rather than sitting around 3-6 months like a banker before you make decisions on how you're going to start pricing mortgages or the direction of markets. I'd say whichever bank got you in to have a yarn with them is pretty smart, because what they're getting is market intelligence that is immediate to help decision making. And every single person that operates in property should be doing the same thing: buyer, seller, agent, property manager, mortgage broker, banker, all relevant. So thanks to everyone dialing in and tuning into this, because that's what we get through. Now, Tom, we've got a couple of minutes, got some quick questions for you. Number one, you're back on the block, I hear. What's all that about?
We're back on the block. November 5. I've got so I did it last year and I quite enjoyed it. I actually missed out a whole day of auctions in Sydney to do one auction in Melbourne, but you get a bit of profile, you enjoy it. The guys that I'm representing, they're fun going guys. I think one of them is actually the PA to Sonny Bill Williams. So they're fun guys. So that's on November the 5th.
Is that the speed change one? Is that the one out in the rural area?
Yeah. That's it.
Yeah,
That's
okay.
it. Out country, out in a rural part.
Mate, I'll make
Melbourne.
this point, Tom. I'll make this point. I want your view on it. The block, up until this point, is about people transforming inner city apartments or houses to appeal to people that want to live in the inner city. Is there a clue in the fact that they're now doing rural sea change properties, the block, that's where a lot of Australians are thinking? How's that going to change property markets?
Yeah, so we'll come back to this comment in a second that the guy's put up there. I'd love to get the answer to that. He's asking you straight, Phil, what you're doing with your money. But let me say to you, Phil, I've come to Auckland and I presented to 150 agents from all parts of New Zealand. It's really clear. Queenstown is still pumping. Queenstown is pumping. So what you're clearly seeing is, whether you're in Australia or New Zealand, areas that have got tree change, sea change, lifestyle areas, they're still got eyeballs on them. This COVID clarity is not going away, right? We're doing this at an airport now by Zoom, right? There are people having having vendor meetings on Zoom. There are strategy meetings across Australia now being done on Zoom. There are job interviews being done on Zoom. There are budgets being presented on Zoom. People can do that in Queenstown. They can do that on the Central Coast. They can do that on the Gold Coast. They can do it in Bangalow. They can do it in Byron Bay. So what you're seeing is those parts of the marketplaces are probably a little bit better sheltered off from what I can see, Phil, these lifestyle areas, Queenstown is going gangbusters, whereas Auckland's copping 20% drops.
Definitely some clues. I look forward to seeing the block. Now, you answered the second question I have is, well, I'm sure the answer to this is not much, because Australians can never learn anything from Kiwis. But is there anything happening in New Zealand at the moment outside of what you just mentioned that will telegraph the direction of the Australian property market here in Australia? They made some changes around investors probably 2 years ago, a year and a half ago, around it's not a deductible. Your mortgage isn't deductible anymore, which really changed the market up and was probably the catalyst for some of the price drops that you saw in the Auckland market. Any clues there for Australia, mate?
No. In fact, what they're basically saying is, we know they believe the Auckland market is highly linked to the Sydney-Melbourne market, and they've been looking at it, which is interesting because they had the correction sooner, Phil, because they had movement on interest rates October, November last year. So they are looking at it. They have been they told me they are disappointed because they were expecting a lot more Aussie buyers to be snapping up properties in Queenstown. They find that happens, but they're getting a lot of Singaporeans actually doing it. They fly in a private jet, look at property there. It's a beautiful place, Queenstown. But, Phil, not really. They are fascinated. In fact, they see Australia as a reference point, not just in the markets, but also with training and education. I am mindful of time, and I know you've got an important lunch. You need to answer this question, Phil.
Yeah.
You need to answer this question.
Yeah, the question is, good question. Cash under the mattress, but gearing up for buying. So I'm working with my bankers now to get a good pathway for funding. But I'm keeping my cash under the mattress right now. And for me, that mattress is an offset account, which absolutely minimises my interest repayments on some of the assets that I own. So I highly recommend that to everyone. If you're not buying immediately, make sure your money's doing good use. And if you're paying interest rates now 4.5% because they've gone up on interest-only loans or the interest component of your P&I stuff, that's a huge saving. You're getting 4.5% on your money, and it's completely liquid. You can move it and use it whenever you want. So if you're not deploying that tactic and you don't know what I'm talking about, speak to your mortgage broker.
All righty. Phil Tarrant, good to see you. To our listeners, this is a permanent record. You can keep this going, and then in 6 months' time, if we're very wrong, you can remind us, because it's not going away. It stays online.
Thanks, Tom. Real Estate Exposed. See you next time, mate.